If I asked you right now what your exact net worth should be by December 2026, could you answer in 10 seconds? Let me say something uncomfortable. If you don't have a clear financial plan for 2026, you're already behind, not because you're failing, but because you're guessing. And the scary part is that most high earners don't even realize it. Most people think being behind financially means struggling, being broke, or living paycheck to paycheck. When I say behind, I mean you don't have direction. You're managing money month to month, reacting to expenses, and investing randomly, but you don't have a clear picture of where all this leads by 2026. Let's make this real. From today to December 2026, you have a limited number of paychecks left. Every month without a plan doesn't pause your progress, it locks in missed opportunity. Money is time sensitive. And time doesn't renegotiate. Now, let's clear up a big misunderstanding. Most people confuse three different things: a monthly budget, annual financial goals, and a real 2026 financial plan. A budget answers, how do I survive this month? Annual financial goals answer, what do I hope to achieve this year? But a 2026 financial plan answers a very different question: what decisions must already be made today for December 2026 to work out? This is not about tracking expenses. It's about pre-deciding trade-offs. Most people are using monthly tools to solve multi-year problems. That's why they feel busy but not ahead. Here's the uncomfortable truth: as a high earner, you actually need a 2026 financial plan than everyone else because you earn enough to make bad decisions, enough to delay planning, enough to say I'll figure it out later. But later is expensive. While your income goes up, your assets don't. This creates what I call the income illusion: you feel rich, but your balance sheet doesn't agree. Let me ask you a serious question: if your income stopped for 6 months, which assets would continue paying you? If the answer is none, your income has been doing all the heavy lifting. The most expensive cost of not having a 2026 financial plan will never appear on your bank statement. It shows up as missed compounding, idle cash sitting in savings, delayed investing decisions, and waiting for clarity that never comes. You don't feel this cost today, you feel it 5 years later. Here is a practical example of 3 investors. Investor A, planned early; Investor B, started late; Investor C, earned more, but planned late. Did you notice something? Earning more didn't save Investor C. So what is a real 2026 financial plan? I'll break down the 4 pillars every serious 2026 financial plan must have, and why skipping even one quietly sabotages everything else. Before we move on, ask yourself, do I have a written plan for December 2026, or just good intentions? Most people don't fail financially because they earn too little. They fail because their money has no structure. I want to show you what a real financial plan is actually built on. A serious 2026 financial plan is not complicated. It's not built on stock tips, side hustles, or motivation, but on 4 non-negotiable pillars. If you miss even one, your entire plan becomes fragile. Pillar number 1 is cash flow structure. Before you invest, select assets, or calculate returns, you must structure cash flow. Most people do this backwards: they earn money, then spend first, and invest what's left, if anything remains. A serious 2026 financial plan separates income into 3 clear buckets: living expenses, investing capital, and opportunity capital. Opportunity capital is the money that gives you options, business ideas, land, or unexpected opportunities. Here's the key principle: you allocate income before lifestyle expands, not after. This is what pay yourself first actually means. The second pillar is the one high earners love to skip. It involves emergency funds, medical cover, and income protection. Keep in mind that insurance is not an investment. It's a risk management tool. Its job is to prevent forced liquidation of your assets at the worst time. Most people skip this because they believe bad things happen to other people. That's optimism bias, and it's expensive. If one crisis can wipe out 5 years of progress, you don't have a plan. You have hope. Pillar 3 is asset allocation, and this is where most people get it wrong. They choose assets based on what's trending, what someone else is making money in, or what feels exciting. But the correct question is, what role should this money play by 2026? Time horizon beats risk tolerance. A proper allocation might include money market funds for stability and liquidity, treasury bonds for predictability, local and global equities for growth, and select alternatives for diversification. Each asset has a job. If you can't explain the job, you're speculating. The fourth pillar is where everything becomes real. Clear, measurable targets. Not "I want to be rich," or "I want to invest more." A serious plan has a net worth target for December 2026, a monthly investing number, and passive income milestones. These targets are not wishes. They're constraints. They tell you how much risk you can take, how much lifestyle you can afford, and what must happen every single month. If your targets don't force behavior change, they're not targets. This is the part where most people pause the video and say, "I'll think about it later." Don't do that. Take a pen and a notebook and structure this on paper. Here's what most people miss: these four pillars work together. Cash flow without protection is fragile, assets without targets are random, and targets without systems stay theoretical. A real 2026 financial plan is structured and clear. And that's exactly why it works. I will now show you how to build this plan step by step, how to define your December 2026 snapshot, stress test your current position, and install systems that work even when motivation disappears. If you want results by 2026, don't chase returns. Build structure. This is where most people stop thinking and very few execute. Let's turn your 2026 financial plan from an idea into a working system. Every serious plan starts at the end. Not with what you earn today, but with what your finances must look like by December 2026. That snapshot should include the exact account balances, asset categories, and net worth total. Not vague statements but specific numbers. Here's the key action: write it as if it has already happened. When you do this, the plan stops being motivational, it becomes a reality. If you're serious about being ahead by 2026, don't improvise this part. Write down what you want your December 2026 financial snapshot to look like. Next, you stress test reality. List all assets, all liabilities, and your current net worth. Then ask 3 uncomfortable questions. 1. Where is money leaking every month? 2. What asset or income source am I over-concentrated in? And lastly, if one thing failed, your job, sector, or currency, what breaks first? This step exposes single points of failure. Ignoring them doesn't make you safer. It just makes the failure more expensive. This is the step that separates planners from performers. Motivation is unreliable. Systems are not. Execution looks like automated investing, standing orders scheduled immediately after payday, and separate accounts to reduce temptation. A disciplined system will outperform a motivated investor every single time. Because systems execute even when you're tired, markets are noisy, and headlines are scary. Let's call out what silently kills most plans. Mistake 1: overestimating future income. Keep in mind that promotions are not guaranteed, and side hustles are not stable. Mistake 2: chasing returns instead of building structure. Avoid following stock tips from unverified sources and joining Telegram groups that pressurize you to invest without doing due diligence or investing just because you don't want to miss out. Mistake 3: having no written plan. Don't keep your financial plan in your head. Mental plans do not compound, but written ones do. Mistake 4: copying other people's portfolios. This is the most critical mistake you can ever make because no two investors have the same income levels, risk tolerance, or financial goals. A good 2026 financial plan is not perfect. It's written, coherent, conservative where it needs to be, and realistic to stick to. It makes trade-offs explicit and prioritizes consistency over excitement. That's how real wealth is built. Here's the truth: being ahead financially is not an income level. It's a decision you have to make because planning beats guessing. Your 2026 financial plan doesn't need to be perfect. It just needs to exist. Today, write your first draft, formalize your numbers, and start treating your money like a long-term project, not a side activity. Now everything we've covered here is about structure, cash flow, protection, targets, and systems. But structure alone doesn't grow money. Watch this video next where I show you how to turn this structure into an actual investment strategy, what to invest in, how to allocate, and how to invest with clarity instead of guesswork.